We got to figure this out, guys, because someone here is lying, and that's very relevant when it comes to, hey, the 10-year yield is going up, the dollar is going up, and the stock market is probably about to break through to all-time highs once again. So who the hell is lying here? And that's what we're going to focus on in this video this morning, and then we will get into some other charting, looking at the bigger time frames for certain stocks to show us if there is weakness in this area or if weakness is about to come, because I think this could be some kind of trap that gives us a little bit of a correction before we get to see in a rally. So let's get into it. I think the best way, and the first thing I really should mention, is just the common sense angle. I mean, most likely the SPY's lying here. Let's be real. I mean, you have the 10-year heading down, the dollar heads down, the 10-year heads up, the dollar heads up, the 10-year heads down, the dollar. You get the drift, and you see what we're in right now. The dollar is heading up, and the 10-year yield is heading up. And as of right now, the market is reacting in a way that would be seen as some kind of lie. And that's just what happens. And if we go back, you just notice the green zones. This is when the correlation was overall correct. We notice that the correlation here is an area where it is not correct, right? We're seeing the SPY go up, the 10-year go up, and the dollar go up all at the same time in these red zones. And we do notice it experiences turbulence. Then, on this date, almost to a T, right, we see April 22nd. You notice that we bottomed out we topped out in these yields on April 22nd. We topped out in the dollar on April 22nd. This makes total sense. This makes total sense for this to be going up because the 10-year is coming down and the dollar's heading down. But then we go through this sell-off. And this sell-off is where a lot of people got bearish, and we started to notice some signals, and then we just said, hey, there is basing out down here. And we actually used on this channel the fact that this was potentially a lie, just not in one of these red zones. Because you did in this area see that the SPY was heading down for a few weeks here, all the way until about, we would say, what, August 5th. But we do notice when we look at the 10-year yield, what was going on August 5th? Yeah, we were getting some kind of bounce, but then we end up going lower. So overall, before August 5th, the 3 weeks leading up to that bottom, you were actually heading down in the 10-year yield. And if you look over here, you were heading down on the dollar. And that's what we were paying attention to. And then we found those basing out signals from the dollar. And now we're actually experiencing it. But I just want to point out the fact that once that lie starts and actually comes to fruition, we see that kind of rebalance of that lie. We notice that this ends up being a massive move to the upside to catch back up. Now we're heading back into an area where we, ever since this point right here, September 16th, we notice that on September 16th, that bottomed out for the yield. On September 16th, well, September 23rd, a week later, the dollar based out and headed higher. But what is the SPY doing right now, and why do you need to pay attention? Well, it's because you could experience a point of turbulence because you are going into some kind of lie right now. Technically, the correct correlation was happening all throughout this green, but we noticed that we went through some turbulence because the market needed to readjust. So what's going to happen here? Are we going to actually see the 10-year head down, or the stock market head down, and the 10-year continue to rise? Because that is something that is being suggested. Okay, that is something that is being suggested by your signals last week. And this is why I think you have to worry about them actually cutting rates more aggressively. Okay, I really think you have to be aware of that, because if we just go over to the 10-year here, we're going to see those zones, right? But we're going to notice on the weekly, we're turning up and going positive. We're noticing on the monthly, okay, you're actually about to curl up into positive territory. You're still positive here. So if this would continue for more time here, we could see yields break through and actually go back into this channel and make an upward move, a massive upward move. And that is not something the market would like. That's not something that Jerome Powell would like. That will put banks under serious pressure, and we will go through a very, very hard landing. So in order for him to make a hard landing that we can maybe control, he actually might have to cut these rates aggressively so that something doesn't break in the system. And we'll be paying attention to this, but right now all you need to notice is the 10-year's heading up, the dollar's heading up, but the market's heading up at the same time. And when that does take place and the lie catches up to you, you better watch out for reversal signals, because the SPY will go through some turbulence. Okay, so now looking at the market, we can see what these zones do on the daily chart in order to find weakness. And that's overall what I believe we need to look for, because I do believe that the SPY is lying at this point. You're in one of those red zones, so you're really looking like, hey, you might be experiencing some kind of lie. And so we want to see what happens in those lies a lot of the time. Well, you see it can take place for a very, very long time on the daily scale, but throughout that, you're going to make a bunch of points of divergence, and once that does get significant enough, we experience bad things. And so you'll notice that as we pull over to right now, do we see a bunch of wonky divergence? And we do. And you'll notice even going up to this lie, we experience this flatness that's a little bit up, and then once that got significant, we experienced something really bad. So what we want to pay attention to is, are we seeing that divergence right now? And truly, if you really look across to these near curl ups, you're not experiencing that divergence. You do not see that point of weakness. But what if we create that in the near price action? I'm not saying this has to happen. That's why I'm showing you the red zone in the past where this continued for a very long time, right? We could get a minor pullback and end up seeing, oh, okay, we're going to actually head higher all the way into the end of the year. But as we're in one of these red zones, we need to be watching out for weakness. If we see a couple up days next week and then that turns down, just know that that lie can catch up to us and we will be paying attention to it. If we just curl up for a day or two here and then we end up curling down, you might have that significant divergence right now. Something you have to be open to is this thing just blowing off. We do see some bottoming out structure from a lot of stocks that have been going down for a long time. Okay, we're going to show a couple of those today, but I want you to be aware that this could just be the first push to really break through, continue that lie, and then we end up going to higher levels. Maybe we actually see this make a more relevant, more significant, and more obvious divergence on your MACD. Maybe we see it go do that on the RSI, and that still would lead us into January of 2020. So I would watch out when President Trump gets into office, not because it's going to be overall bad for the economy, but it could be overall an adjustment. What happens when you are caught in a lie? We've talked about that a lot today. Well, in a lie, if you continue to do that, once the truth does happen and it catches up to you, something bad happens. In this area, we were behaving correctly, and then we started that lie, and what happened with that lie at the end of the day, it ended up going in the upward direction. Now we're in one of those moments again where you could say, hey, something bad is most likely going to happen here, and the market might need to readjust to all the new policies coming in, and that might be seen as what? The truth, right? We know that the stock market is built up by debt. We know that a lot of the numbers they're putting out there aren't real. We know that the data is fudged. We know a lot of lies happen in the stock market media, in the stock market itself, in the derivative market, in the options chain, in all areas of the market. People have proven it again and again to see that there are some bad behaviors happening that could be seen as a lie. And when that truth does come, what if this market is needing to really readjust to that truth? And I think that's what we're looking for with some kind of major stock market top. But I just want to point it out once again, this can continue for a very, very long time before you actually experience that turbulence. Okay, so hopefully we can understand that we're just paying attention to times where there's kind of a difference going on between what should be happening. And I think we're experiencing that now. We're seeing the dollar head up, we're seeing the 10-year yield head up, and the market head up. It is something that we've paid attention to forever on this channel. I think ever since I started, we've talked about that because it's a good way to find traps. And if you start seeing reversal signals, you can see something bad happen. So what's the signal here that would really shake things up? Well, like I said, we can continue this for quite some time, right? We can continue to see these little weekly curl ups and see really wonky divergence up here, just like we did way, way back here before we found a market top. So what we want to be aware of is not only the shorter time frame of the daily, but we want to be aware if we're seeing significant divergence, because the last top we had, we saw significant weekly divergence on the MACD right there, on the RSI right there. And we notice that right now we have the potential to again confirm that divergence. And what we would need in order for that to really confirm, as this did not cut below the 9-week moving average, 9-day moving average, but we see here that if this crosses, we would need that to actually break the 9-day, and then we'd pay attention to the bottom of the channel. But if this crosses, you would be confirming major divergence here, and I would watch out because the SPY could be experiencing that big top right now. You guys know I'm leaning towards a corrective move, maybe down to something like 570 at this point, something small, maybe a blip out of there to really scare people, and then that thing whips back up, and we actually see this get a little bit more clear going into January. That's what I think is going to take place here. Maybe it leaks all the way into February. We'll see, but this is what you need to have on your radar, because this is what a lot of investors don't pay attention to on the retail side. And I can tell you right now that dollar rising is most likely insiders selling. Those big investors who have more money than you are selling their stocks to you right now. And it's right as we approach a top. Yes, it can leak out for a few months. Yes, we can always correct and keep this thing going higher, but just know once it actually does tear down, we get monthlies to turn down, this thing's going to get ugly. Really be paying attention to the Qs is because you have one of these signals right now. And I know I'm talking about a corrective move that most likely ends up turning us to the upside, but it's very important to understand I'm going to treat this very seriously. I treated this one very seriously, but then I saw reversal signals on the shorter time frame. So if you want to come back for the shorter time frames, we can usually catch when this is going to be a blip. This is when we saw that 30-minute higher low and a 30-minute divergence for the SPY right before the election, and it really helped us out. Right? It told us, hey, the move can most likely go make a move up towards a sell zone. We gapped above the whole sell zone, so a lot has changed. But if this does curl down, I'm going to treat it very seriously if it actually closes below the 9-week moving average. Because this time we didn't, and we called that out and said this could be a blip. But this is so significant right now that if we go through any kind of weakness over the next couple of weeks, you have to treat it very seriously. Then you have to see if that's able to curl back up into positive territory for maybe one more move higher into 2025. And this is another thing that we were pointing out, was the fact that we don't see that divergence on the weekly confirming for a big stock like NVIDIA. When a big stock like NVIDIA gives you a signal like this, and we notice that there's divergence here, but we said, hey, this is probably going to be a pullback. Why? Because you're extremely high on the MACD, right? Which means you're far away from the center line, and you have that divergence only on the RSI, which usually leans towards a dramatic pullback. You'll notice we were able to base out and turn back up. Thank you, NVIDIA, for helping us out in these areas, because those divergences outside of monthly expected move helped us, and they were great trades. Even here, we got another one, great trade, right? So this is what you can learn in the course, by the way, these moments where you are going to see you base out and end up turning back up. You'll get a great understanding of the MACD and when to think like, oh, the market actually is going to crash, or whether to see like, most of the time we make momentum signals before we crash, like almost every single time. So now you're seeing that you didn't in the past, and that's something very important to learn. So if you want to learn this weekend, the course is 90% off just for like 8 more days, so you have to get it now if you want it. And it is $150 to take both of the courses. You can get swing trading and the full technical analysis course down there, how to use these indicators. We go very in depth for only $150, and that is going away very soon. So get it, because you only got 8 days left. Okay, we're going to mention it and ask questions if you do have time. So if you want to come ask questions about it during the live stream, please come back and join us throughout the week. We do go live every morning. We do notice NVIDIA has not crossed here. So until NVIDIA really crosses, I can't say there's weakness. And until that really goes negative, starts to curl over monthly charts, this could always whip back up and make another point of divergence. So that is something we will pay attention to, but we want to treat this curl over very seriously, because NVIDIA is this might be the biggest stock in the stock market for everyone. And if that's confirming some major divergence, that's not a good thing. Now we do notice that this can turn up over time, but the monthly's been going up for so long that if it experienced 12 to 24 months of negativity, you might see this thing leak down for a very long time before that's able to scoop back up. We might head all the way down to something like 42, 39 before we're able to turn back up and see that good investment. You notice if you just bought this on a monthly chart with a swing trade, $26.95, you would be a very, very solid, very happy boy, I'm sure, if you got this thing at $29.65 and you're sitting pretty up at $3.84. And then you see that weekly signal. What the hell is the point of trading back and forth if you're not going to pay attention to a signal and you're just going to be like, yeah, this thing's bullish forever? It can't be bullish forever. It's just how things work. Things will come down. So we just noticed the signal, and why would we really be paying attention to this? Well, because other stocks have given us weakness for a long time. AMD, right, has seen weakness for a long time. Now, this has the opportunity to maybe turn back up for a bit of time, but do I think this is really going to see a new all-time high in the next 12 to 24 months, or do I think it's more likely to see new lows in the next 12 to 24 months? Well, as of right now, with the signals, I would say that this has a more likelihood to see a new low over the next 12 to 24 months. Now, why would I be saying that? Well, it's because of the monthly. If you really notice for AMD, the monthly turned down right here. Okay, and this didn't have real divergence. It had one on the RSI, but not on the MACD at the same time. It's still in that overbought territory, so this could be a big pullback. And overall, that was when we experienced that bear market, and you would say, hey, that was a big pullback. Okay, that was a big pullback, and then we crossed up on the center line, and what happened? Another move higher. But what are we doing right now? We cross over on this MACD. Yeah, you're flat, if not a little down across the top, and now you have a very, very significant divergence going all the way across, giving you triple divergence on the RSI. So I am someone who believes thoroughly that bigger time frames have more momentum in them. It makes total sense. They have more volume in every single bar, and you have monthly momentum telling you there is extreme weakness for AMD right now, like right now. Now, this can leak out for a little bit more time, but the likelihood is over the next 12 months, most likely AMD does see lower prices. This means that AMD can go all the way back down to these lows back in 2022, all right? So if that's saying this, and NVIDIA is showing me a weekly divergence, I better be ready to react. You're not only seeing it for AMD, you're actually seeing it soon, right? We're in the month where it is happening. You're seeing that red bar on your histogram, but what is the big difference here? You cross down on a monthly, what happened? Bad things. Right? Bad things. We curl back up on a monthly in positive territory. What happens? Great things. You can literally do this back and forth and have almost little to no risk out there for the market and just sit there and be like, okay, cool. We went through something bad, but we curled up in positive territory on a monthly. And that could happen again. So be prepared for that to happen. Just hope we're not down here when it does. Hope we're not negative when it does, because that could be some kind of lower high at that point. Right? We could go through like years of downside with this. So what are we noticing now that is different from right here? That was bad. All right. But now you have divergence across for Microsoft. Now you have confirmation happening this month. So if Microsoft is not able to make a push higher here in the next week, you would have a major confirmation of divergence on the monthly scale. And Microsoft is a massive stock. This means that this could be just a little bit of weakness. This could be a lot. You could come all the way back down to 210 for Microsoft. You're looking at almost a 50% drop that could potentially happen. And you're actually noticing that that would be a great level if we wanted to even head lower. You could come down to there, react off of it, and then see a head and shoulders pop up. Right? This is why the shorter time frames are so important to be cautious and be looking out for those signals that can show weakness for the daily or weekly time frames, because you don't want to be caught up in this. You don't want to be caught up in the mentality of this is just a pullback. This is just a whatever. This is a correction. We might go through a short daily correction soon. But if you're telling me we're going to go through a monthly correction like we did here and end up going higher, hey, that's fine. This will tell me, these signals right now are telling me that this is going to be a lot of weakness coming in 2025. And then you're sitting there wondering, like, hey, why do we have so much volatility? Why are things so messy? And it's because of those lies from the beginning, right? We see huge reactions to these things because people are falling asleep at the wheel at certain times, and eventually they're going to maybe crash into a curb, maybe hit a sidewalk. But sometimes you might end up going into a coffee shop, going into a wall, and that's not a good thing. And we notice that the monthly has turned up for volatility, and it has not turned down. Now we are lagging a bit, right? We're kind of seeing that resist off of the, like, being able to go positive. But when you go positive is when you really want to pay attention, okay? So notice that this move is not going positive right now. What happened back in 2018, we experienced some turbulence. What happened in 2020? Well, your monthly momentum turned up and volatility skyrocketed. Kind of a quick one there. What do we notice in 2022 of February or 2021, right? That beginning of the bear market, we noticed that volatility was able to curl up into positive territory. So a signal we can really look out for is when this actually goes positive for volatility. That is going to be very key. Are we going to see that happen right now, or could we buy some time on the weekly scale? As of right now, volatility is telling you that you might buy yourself some time on the weekly scale. We're going into the shorter time frames on this on Sunday, so make sure you're subscribed, because this does show us some signals in the shorter time frames that says a turnaround soon could be quick. I think it'll be a correction. I highly doubt they let it fully crash before 2025 begins, before Trump gets in. I think they really want that. But we do have things with Russia going on. We do have some problems going on, and if volatility comes in, we could confirm some big signals, so react, but pay attention and join us for Sunday's video so we can go over that with you. I just want you to know, volatility turned down on the weekly. What did we say when that turned down on the daily and the weekly? We said we're going to experience a squeeze, and we've been experiencing that. But notice that volatility hasn't gone negative. So if this weekly is able to base out on those shorter time frames we're going to go over, and this turns back up, where would it be? Positive territory. What do you need for the monthly to go positive? You need the weekly to turn up in positive territory. So this could be right around the corner, or we could be going through a corrective move and see one more big trap to the upside. But it also could blow off top right now, and we could just see this thing top out. So it's important to check back in here every single night. Join us for the live stream, ask questions, because sometimes you guys point out things, you make me go look at it, and it even helps out my trading. So I think it's fantastic. And overall, this video was just to get your mindset of, you might be seeing a lot of people get bullish right now and saying this is some kind of big trend to the upside, and we're going to keep going up and up and up, and the market can't go down. We're going to experience more of that going forward, I think. I think we're going to either experience that very quickly and then see something bad, or we're going to experience that, see some kind of correction, go up higher, experience it even more of a blow off top, and then you actually see this thing tear down right when no one expects it. And it might be in the form of a bear market, so that's why we have the course out there for 90% off. 90% off. We are never going back down to that price point. This is the last time you can get it for that, so if you want to learn over the weekend, go get that, and you can use it for all kinds of strategies, but we even give you a strategy that I use when volatility is higher, which is exactly what you need for a bear market. Thank you guys so much for watching. I really do appreciate it. I know it was a different style of video, but I think it is good to really switch up our thinking and think like, you know, what are the correlations out there? How is this behaving? Should I be worried about some kind of downturn? Am I in a lie right now? And we just said, you are in a lie right now. You should be a little bit worried about a downturn, but you don't have the signals confirmed just yet. Thank you guys for watching. Have a great day. I hope you guys have a great weekend. Peace out.